Welcome, everyone, to Vested Interest. This is Shane. It is Thursday, May 29th. We're going to take a look at one out of the information technology sector. This is Hewlett Packard. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day, run it through my screener, see if it makes it onto my watch list. Now, even if it does make it onto my watch list, that does not necessarily mean that I am buying. It just means that I am interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, stuff like their revenue. Is it growing over time? Are they paying down debt? Are they buying back shares? Do they have more assets over liabilities? Are their margins expanding? That sort of information. So if you're not interested in doing that kind of deep dive, you should definitely not be looking at individual stocks and maybe stick to ETFs. Warren Buffett would recommend something that tracks the S&P 500, something like VOO, which is Vanguard's S&P 500 ETF, or an index fund that does the same. There's plenty of them out there. Franklin Templeton has one. I know Schwab has one. Most every brokerage out there is going to have one, if not more, than ETF or index fund that tracks the S&P 500. Now, thank you to all the viewers and subscribers of the channel. The channel continues to grow because of people like you. And if you could watch the videos to the end, watch time is one of the metrics that the YouTube algorithm looks at to spread the videos and share with anyone that you think might find value in the content. All right, this is the Vested Interest Stock Screener. You can pause this, go through the criteria here. It must meet 5 of 8 to make it on my watch list. If it was a bank, we'd add in price to book, with 1 being fair value. Don't blindly use 1 for fair value for companies outside the financial sector. That really is for banks and insurance companies. All right, back to Hewlett Packard. Check them out at their homepage, www.hp.com. That's www.hp.com. That is their homepage where I pull this one from, and it's a very easy one at that. About us, we are a technology company born of the belief that companies should do more than just make a profit. They should make the world a better place. Our efforts in climate action, human rights, and digital equity prove that we are doing everything in our power to make it so. With over 80 years of actions that prove our intentions, we have the confidence to envision a world where innovation drives extraordinary contributions to humanity, and our technology, a product and service portfolio of personal systems, printers, and 3D printing solutions was created to inspire this meaningful progress. We know that thoughtful ideas can come from anyone, anywhere, at any time, and all it takes is one to change the world. And that's really their bread and butter. Again, they're technology companies, laptops, desktops, gaming consoles, business laptops, business desktops, workstations, printers, monitors, 3D printers. That's really the type of hardware that they provide. They did have a split here a while back. They do have a other technology arm. I think that's more in the software space, whereas this is more in the hardware, printers and that sort of thing. 3D printers, I think, is their most recent addition to the lineup there. But even that, I think 3D printers have been around for a while now. They're nothing new. Now, the reason we're taking a look at them, down 8.27% on the day. They are also in my portfolio. I am long HPQ, which is the ticker for HP Inc., out of the information technology sector. Close out the date, $24.95. Looks like they're up slightly in the after hours, at least whenever I pulled this information. 52-week range as low as $21.21, as high as $39.80. Very close to their 52-week low, and definitely within 15% of that 52-week low. Now, market cap of $23.516 billion. They did not have the beta listed, which leads me to believe maybe they are slightly above the average of the market, with 1 being the market. PE ratio is low at $8.97. Earnings per share is at $2.78. Earnings date coming up sometime in August, the 26th through the 1st. I actually believe they recently had an earnings report out, if not within the last couple of days. So I think this will be the next one, but I think that they recently had an earnings report out. So I'd look at the most recent one. This will be their next one. Forward dividend is $1.16. They are a quarterly payer, so divide by 4, though we will see that here towards the end of the video. Nice starting dividend yield of 4.26%. Ex-dividend date, June 11th. Looks like they're going to pay out on July 2nd. So you want to buy them on June 10th or before to be able to get that next dividend if you're interested in this company. 1-year target estimate, at least according to Yahoo Finance, $28.55. So they see some potential upside from where it currently sits, but not a lot, and they don't see it getting back even close to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average of 3.22%. We compare it to their current 4.26, or over here 4.2 forward. I know it says forward, it's the current 4.26%. And since the current dividend yield is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Payout ratio is pretty low at 40.15%. I like under 75%, so plenty of room for them to continue to grow that dividend, and it does not appear they are in danger of cutting that dividend with lots of free cash flow left to spare. Now, we do want growing free cash flow because there's some things the company can do with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, raise that dividend, which I as a dividend growth investor want them to do, and they could even keep some of that cash on hand just for a rainy day or to pay some bills or do anything else they want with it, invest, whatever. Now, free cash flow going back to October 2022, that's $3.6 billion in free cash flow. Looks like it was down October 2023 to $2.9 billion, back up in 2024 to $3.1 billion, and through trailing 12 months, which still does include some 2024 numbers, even though we're halfway through 2025 almost, is at $3.2 billion. But we don't know exactly how much of this trailing 12 months is skewed by 2024 numbers. Repurchase of shares, they are pulling shares out of the market. $4.2 billion in 2022, $100 million in 2023. 2024 saw them take out $2.1 billion, trailing 12 months at $1.7 billion. So again, we don't know how much of that is 2024. Now, jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with stockanalysis.com or Yahoo Finance, just two sources I go to, and I do recommend more than one source for you as well. 2, if not 3 sources. You pick any sources that you want. You don't have to use the ones that I use. Just, again, make sure you're looking at more than one source so you can make sure the information you are looking at is accurate and up to date. Stockanalysis.com does have 12 analysts that have taken a look at this. They call it a consensus hold. Low estimate of $25. It currently sits slightly low. Well, after hours a little bit higher, but at the end of the day, slightly lower than their lowest estimate. So if it came back up, that would represent a 0.34% increase from where it currently sits. Average estimate of $30.46 would represent a 22.26% increase. And if it happened to hit their high of $39, that would represent a 56.53% increase. All the while, you could collect that 4+% dividend yield. Now, jumping into statistics, I like to look at return on capital employed. I like 10% or better for this number. Return on capital employed here for HPQ is 31.50, so smoking high there, well above what I'm looking for at 10%. Earnings per share growth, I like 5% or better forecasted over the next 5 years. They're at 9.35, so again, they would both get a check there. Revenue growth is listed at 1.39. This is actually part of more of my deep dive. Whenever I get into the financials of the company, I do look at revenue, but I'd like to add it here anyway. All right, history of dividends, quarterly payer, as we mentioned, payout ratio, they're saying 44.35. So this would be an example of why I would look at more than one source. Plus they didn't have the how volatile the company was, the beta of the company either. So that would be another reason. But this would be why I would look for more than one source. They're saying 44% payout ratio. Yahoo Finance had them around 40%. So not that there's a huge difference, both in the 40% range, but 4% difference there nonetheless. Dividend growth of 5%. 7 years of dividend growth. Buyback yield is positive 3.05%. They are efficiently and effectively buying back shares, pulling more shares out of the market than they are issuing. Shareholder yield is positive at 7.66%. They do pay out off schedule, January, April, July, October timeframe. Going back to 2022 here, you can see 26 cents and some fractions of a penny. Raised that up December 2023 to 27 cents and some fractions of a penny. Raised it up again December 2024 up to 28 cents and some fractions of a penny. And I would anticipate that their next raise will be December of 2025 and maintaining another year of dividend growth. All right, let's run it through the screen or understand the business. Again, they are selling, your laptops, your desktops, whether you're a business or an individual, you can buy them. A lot of the reason I looked at them actually initially was because I noticed a lot of the companies that I've worked for, anytime I'm issued a laptop, it is from Hewlett Packard, HP right on the top. So a lot of the companies that I've worked for as well use their printers, and I know everyone keeps talking about this paperless society that we're going to. I have not seen it in any company that I've been to. We still print stuff on the daily. Now, I know 3D printers are becoming more and more common. My daughter actually has a small one that she likes to play with. It's not a great one. You know, the edges are kind of rough and you got to sand it a little bit, but there are some very nice ones out there, and Hewlett Packard is in that game. So I think as they become more common, maybe they get a little more revenue from that space. But again, you know, printers, 3D printers, laptops, desktops, that sort of thing. Growing free cash flow. I know we had a couple down years. Growing dividend, yes, it is growing. Around 6%. Dividend payout ratio is well under 75%, again in the 40% range. Dividend yield theory says they're potentially undervalued. It is within 15% of a 52-week low. Return on capital is over 10%, over 30% actually, so check there. Earnings per share growth is over 5%, so check there. So we're looking at 7 of 8, and again, this one is in my portfolio. It is one, if it is below my cost basis, I might look to nibble on a little bit. Nice dividend yield. Really like this one. I am not concerned with it, and I like to see all of the green checks. That's one of the reasons I do a lot of these videos on positions that whenever I have them and they are pulled back on the day. If I haven't done a video in recent memory or recent time span, I will look back at the companies I hold to do a back check on what I'm holding to make sure they are good. This one looks good. Let me know what you think of HP. Hewlett Packard, HPQ is the ticker, in the comment section down below. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever I put out any new content. Drop a comment on the video. Let me know what you think of HPQ. Share the video with anyone that you think might find value in the content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. Don't forget to tune back in for my Sunday morning portfolio update. You'll see what I bought, any dividends I received, any options I was in for the week. One more reason to click that notification bell down below, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Special thank you to everyone who's made it to the end of the video. Thank you for watching to the end. Don't forget to hit that subscribe button on your way out if you haven't done so already.